Hey, Mad Money fans, check the bottom of your screen for an exclusive offer. Next.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Oh, yeah, we came in real hot after yesterday's strong showing, and it sure looked like we could continue the upside trajectory at the opening. But then the rally fizzled. Dow only sinking 159 points. S&P dipped 0.27%, and the Nasdaq eked out a 0.14% gain after trading sharply higher at the opening. The culprits behind the downturn? Well, there was a laundry list of hazards, the heated rhetoric between the automakers management and the UAW, something that increasingly looks like it is going off the rails. And then there's that bizarre internecine warfare in Congress where House Republicans can't even agree with themselves, let alone the Democrats stuck out for more. That was a sore spot. Plus, just like everything else in September, the fear of higher rates and higher oil sure did loom over the session, even though they both eventually finished lower today. The reasons, the result, well, it was a perfectly good October-like rally, but it fell on the shoals of September. And those who bought an up market at the open couldn't leave today's session with anything other than the usual sense of despair. Just another good-looking start that led to a nasty denouement, like we've gotten used to over the last 30 days, haven't we, you and me? The good news? When we come in next week, September will be over. All right, speaking of next week, we want to be as relevant as possible with our game plan. So let's not bury the lead because on Friday, it's going to go right to it. On Friday, we get the September non-farm payroll report, and this is the single most important number we get from the government. If we're going to have a strong October, we got to start with this. Start with a softer unemployment number that shows some slack in the labor force. Otherwise, we'll spend the whole month worrying that the Fed's going to lower the boom on us to cool things down. Now, this is a tough call because we don't want to see any sort of wholesale economic collapse, because then we'd be worried about earnings per share, earnings cut, forecast down. But we also want to see consistently strong unemployment numbers, because then Fed Chief Jay Powell has no wiggle room, and interest rates are going higher, starting with the longer end. Now, I continue to believe that come the end of October or to November 1, when the Fed meets and then talks, we'll get a quarter-point rate hike, and longer-term rates will follow. I think the yield curve, which has been inverted, will finally switch back to normal, and the yield on the 20-year Treasury will likely pass short rates and go near 6%. But that will not be a disaster, people. It will not. See, I know that it'll be seen as negative for the stock market, but if you hop in the Wayback Machine with Mr. Peabody, you'll find out that we've had plenty of markets in the 80s and 90s when rates went higher and stocks rallied anyway. Rallied strong in some cases. Of course, if the employment data is on the softer side and it looks like we're at the beginning of sustained weakness, then the Fed might be done tightening. In that case, longer-term rates may start going down. The market could be up huge, and that's why the bulls are rooting for economic weakness. It's the only thing that can make the Fed stop. It could be an explosion of stock prices if we get what I just mentioned. At the same time, our markets have been held hostage by oil, so the labor report may be less important than we typically expect if the price of crude breaks through 100. I think it might stop there, but I get the concern. And by the way, later in the show, you're going to hear that all the stuff about oil that you have been related to in terms of the stock market is wrong. So don't draw any nasty conclusions just yet. It's also highly possible that we could have a government shutdown. In that case, we won't even see the labor report until Congress passes a budget. Wonderful situation where we can't even get more time to agonize about the economy and the Fed. So this does not come out on Friday if the government shut down. I want to be clear, you know that, so you don't think I've led you astray. So not too hot, not too cold, but closer to cold, and we could be in great shape. Anything else, and yet we're going to have problems, and we're going to see a little September tinge October. Now back to Monday, the first day of the fourth quarter, and it starts with something that we've covered very well that I think is kind of exciting. That's the breakup of Kellogg's into Kellanova, which is the snack food business, and WK Kellogg, that's the North American cereal business. I suspect that growth-oriented investors will actually be attracted to the snack spinoff, which includes Cheez-Its, Pringles, and Pop-Tarts, among other goodies that may not be all that good for you, but sure do taste good. They're trying to unlock value here, although Kellogg's stock hasn't been a winner since the breakup was announced. People hate the food stocks. I hope hope we'll get some news on both the government shutdown and the auto strikes. Either way, I see both situations. These are agents of economic decline. The government closing only impacts 25% of the non-mandatory federal spending, so it's not as big a deal as it sounds. But the auto strike is truly a thorny issue that keeps expanding. And if it keeps expanding next week, it will not be all that good. It will slow down the economy. The stocks trade like there will be a deal, though. But when you listen to the head of the United Auto Workers, Sean Fain, he seems like a bit of a capricious fella. So who knows, especially when he's got the president of the United States walking the picket line. I mean, he must feel completely emboldened, right? By the way, I thought Ford's Jim Farley laid out things pretty straight this afternoon about how generous Ford's offer's been, but that just brought catcalls from Fain. I got to, it is getting really personal. I don't like that. Jay Powell speaks Monday, among other Fed folks, and it's not clear whether he'll say anything that moves the needle. But remember, his bias is to stop inflation, not to boost growth, even if it causes gigantic job losses, frankly. I doubt he'll make us feel better about things. Now, he obviously doesn't want gigantic losses. He's a very good man. But in order to see rates go down, we're going to have much more unemployment. We have to. Tuesday, we get results from McCormick, okay, the spice company, and they also make seasonings. And by the way, they have a new CEO, Brendan Foley. The packaged food group has been out of favor, as I mentioned before, with Kellanova. That's in part because there's a belief that we'll have to roll back their price increases from the last few years. By the way, didn't Costco really say that? Didn't you hear that from Craig Jelinek? I did. McCormick currently sells for 28 times earnings, which is most likely too high for its cohort. And that's why the stock has been steadily declining. Now, here's a good one. We've got an analyst meeting from Molson Coors. That's the iconic beer company. Liquor's only been okay of late. This year's been actually a downer for what we call the browns and the clears. But beer sales are still strong, and this company's been firing on pretty much all cylinders. I like the stock, but not as much as I like Constellation Brands, the parent of Corona and Modelo, which we own for the Charitable Trust. Constellation reports on Thursday. I expect a good number. They might give us a hint of the major restructuring that could be announced at their analyst meeting in November. Lots to like there. Wednesday, a Cramer staple, Okta. Sounds like a food company, right? Oh, we got some Okta, we got Conagra. No, it's not. It's cybersecurity, silly. It's going to hold its meeting. Okta's going to call it's called the Octane. Well, like Workday Rising. I mean, you get these things. Salesforce, Dreamforce. All right, maybe it's just the guys out west. They have a silly idea. They have a strange sense of humor. Here, I think CEO Todd McKinnon will talk about the difficulty of stopping the hackers because they prey on employees who try to be helpful when the bad guys pretend to be their coworkers. The bad guys never stop, which is terrific for Okta, but and for the security cohort, cybersecurity cohort in general. But that's why we have such a big position for Palo Alto Networks for the trust. Thursday, ConAgra Brands reports the stock's been a one-way ticket to the danger zone lately, falling from 40 at the beginning of the year down to $28 today. It now supports a 5% yield. That's rather remarkable. But then again, if you can get 5% from treasuries, you might think twice, given how ConAgra stock has been acting. These food stocks are just terrible. You might be intrigued by Levi's, which caught an upgrade this week. Chip Bergh will be departing as CEO soon, replaced by Michelle Goss. Lately, she's laid of Kohl's. Apparel, like food, has been totally out of style on Wall Street, except for Lululemon, which can do no wrong. Now, if there's an analyst meeting that can move a stock, I think it's going to be Thursday's gathering for Dell. I know, prosaic, but don't. Prosaic makes you money here. They reported a truly stunning quarter and gave a great forecast last time. This is a totally unsung story with a stock that could have more room to run. And then the bookend, the labor report, will decide whether we can truly rally in October. Bottom line, if you want to know where the market's headed, no number is more important than the Labor Department's non-farm payroll that we get on Friday. But again, we won't get it if the government shuts down. It can thread the needle. On the softer side, we could come into real earnings season, which starts the week after, with a decent and positive head of steam. Let's go to Greg in New York. Greg.
Hi, how are you, Jim? I'm a big fan of your show.
Oh, thank
you for everything what you're doing out there for us, for investors.
Thank you, Greg. I greatly appreciate that. How can I help?
Yes, my question is about airlines, specifically about United Airlines. What should I do? Hold, sell?
I'm not a big fan of the airlines here. They finally have kind of run out of steam. What I would tell you is this fuel cost is really kind of making it so that they're really on their heels. We have to see oil go down sustained fashion before people are going to come back to them, whether it's right or not. Let's go to Frank in Florida. Frank.
Hey, Jim. Thanks for taking my call, and I appreciate everything you do for us. I know you're an Eagles fan,
Go Birds.
Go
All right. No, we play the Dolphins. It's going to be Monday night. Maybe I'll take Tuesday off. I don't know. If we win, I'll take Tuesday off. If we lose, maybe I'll take Tuesday off. What is it?
There you go. Buy or sell FIS Global.
Oh, man. Okay. I mean, I say this because I've been looking at everything that's fintech, everything that's related to the banks, anything involving whether the banks or clients. And I have to tell you, another payment service provider, even though it's one of the original ones, I'm not going to endorse it. Crowded, and the market doesn't like them. Hey, how about we go to Marvin in my home state of New Jersey? Marvin.
Hey, Jim. Listen,
Marvin.
I got two things for you. Number one, you got the best educational investing show ever on TV, and congratulations for that.
Thank you.
And number two, be careful going home because the weather is brutal.
Yeah, my wife told me it's very difficult to get from one area to another, like 3 hours. I appreciate that. I am concerned myself.
Be safe.
Thank you.
Safe. Just wanted to ask you about McDonald's. Why is it taking a 10% hit?
Okay, it's a great question, and it's getting interesting, but there's been some, I say some chatter between the franchisees and management that doesn't seem to be going that well. I also think, by the way, it sells at 23 times earnings, and we're paying less for every single stock. Someone might just say, listen, I'm not going to pay that with interest rates at 5. I'm only going to pay 20 times earnings. And that's that multiple contraction that we see in all the great growth stocks. Next week, it's all about the jobs report. If we're going to have a strong October, it has to start with a jobs report that shows some slack in the labor force. I sure hope we get the number and the government shutdown doesn't stop it. Oh, man, tonight, September's been a tough month for the market, as you know. But that didn't stop a host of IPOs from making their debut. I'm recapping all the deals we saw this month and where we stand. Now that the fanfares died down, you may be still holding back. Then it seems like every rally in oil is bad news for the stock market. So how should you really interpret the relationship between the two? It's going to shock it. I'm going off the charts with the help of the legendary Larry Williams, who told you not to see you in September because it would be a bad month. And you called in and you stumped me on Primora Services and Motive Care. And so tonight I am turning in my homework and sharing where I come down on the two names. One of them seems very attractive. You probably have to listen to find out which one. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.